Hey guys, my name is Alejandro Zambrano and I'm the Global Chief Market Strategist with ATFX and also the editor of the site investingcube.com. And next week on Wednesday, we're going to have the next RBNZ interest rate meeting. So we're going to take a look at the Australian dollar versus the New Zealand dollar and also talk a little bit about what the markets are anticipating. Now, some economists are projecting a rate cut from the current percent of 1% to 0.75%. But then you have big banks in the region like Westpac telling us that next rate cut, if it happens, is probably going to be in February. So what's the story then and what's going on? Well, as you can see here, the interest rate was pretty much unchanged for a very long time and spent most of 2018 here just being unchanged. And then over the last few months, and in particular from, as you can see here, from August, they actually cut interest rates from 1.5% to 1%, have that steep decline there. And the reason for cutting and also surprising the market is because the New Zealand GDP growth has been declining. This is the annual GDP growth, and you can see that the latest reading shows a reading of 2.1%, which is declined from 2.5% in the prior quarter. As well, if you look at the leading indicator, the PMI indicator has dropped sharply. So the economy is not doing too good. The economic growth is slowing. If you look as well at things like the unemployment rate, it bottomed out, it looks like, here a few months ago at 3.9, and then it went up to 4.2. So again, things are not going in the right direction. As well, inflation, it's lingering just below the 2% level, and this is core inflation, which is pretty much at the same levels. So the central bank cut rates to support their economy. Now, as I said, no one really anticipates a rate cut at the next meeting, but you still want to look for comments in the statement of the deteriorating economic situation. And if they do go ahead and sort of hint that they think they might need to cut interest rates further, then that could cause the Australian dollar versus New Zealand dollar pair to go upwards. However, though, just to bear in mind, one of the central bank governors, Mr. Hawkesby, recently said that the central bank was very happy with how interest rate cuts year to date had been transmitted through the economy. So effectively, they're telling us that they're literally just waiting to see what's going to happen. Technically, though, in the Aussie dollar pair, this is a daily chart you're looking at. The trend remains bullish for now. This is not a big change here. There's a trend here for a weaker New Zealand dollar. And you can see how the price is trading within a nice little rectangle. The price reached this level already in September and pretty much traded sideways since then. And it's very straightforward trading these rectangle. The difference between the low and the high, which happens to be 178 pip, is your profit target. So if we trade about 108.43, then this could go higher by about 178 pip. On the other hand, if we break to the downside, then it's probably going to go down and maybe decline to this level here, which is 104.88. So it's going to be an interesting situation here by next week. And overall, the trend is bullish, so wouldn't surprise me if we trade upwards. And specifically around the central bank rate meeting, you're looking for comments that would tell us that the central bank is more dovish. So you will look for downgrades in growth, downgrades in the outlook for the labor market, and maybe even inflation. So that is what I would look for. And the easiest thing is just to go to the central bank rate home page, read the latest statement, and then as soon as they publish a new one, read the latest one to do a quick comparison. Thanks so much for watching, guys. I hope that this helps you to get prepared for the markets. If you don't have any questions, as always, you're most welcome to reach out to me via Twitter at AlexFX00. Have a great day. Thank you.